Yeah, so hello and welcome back everyone. Today we will see that how to find the stocks from different industries and different sectors, right? Because everyone tells us that we should diversify our portfolio, but now today let's see that how we can do it easily. And again, I am using Picker for finding the stocks. It is not a promotional video. Let me clear it. And we will see here. We can see the sector-wise each and every stock, so that we can see the stock from the important sectors. For example, the first sector is the agriculture sector. It is one of the most famous sector in our India. Okay, we can say because our India is an agricultural country. So we can say see that many stocks today have jumped uh, by a huge percentage. And so we can filter it out on the basis of the PE ratio according to the first thing that we can see. If some company is trading at such a high PE and if not generating much returns, then we will not see it, and we will see the company which we know. Okay, so that we can invest in it or not, that we can decide. Yeah, so now, yeah, there are many companies as you can see, but any company with a good market cap like this and a good PE ratio would be perfect for our analysis. Okay, guys. So yeah, that's it. As I told you, if the consolidated statement is available, go for it. If not, then it's okay. It is of 530 crore market cap and almost 95 crore is a debt. So yeah, it's a risk, but good ROE, good ROCE, and good profit and sales growth as we can see. Okay, there are no other ratios that are available here for us. So we can see the 5-year chart so that we can come to know the PE ratio. Its PE ratio is higher than its price. That means it is slightly overvalued than it should be. It is the first case. It is not the final result that we are on. Okay. This is ROE, this is ROC, profit growth, price to cash flow is negative, debt to equity is very high. So yeah, we should not buy it. Let's go for any other stock in this agricultural sector with a lower PE and a good market cap, because a good market cap is required, right? We cannot invest in micro caps and just bet on them. Even if its market cap is very less, we should not go for it. We should stay away from it because the operators, as I had made the video, that operators target small stocks. And because there is very low volatility, they can easily manipulate it and make money from it. See, this is a 1050 crore market cap company with less debt, but its profit growth is negative and sales growth is a bit high, and ROE and ROCE are not good. FCFF is positive. This is the positive one. That means the company does not have to put all the money back into the business, and they have a some free cash flow which directly goes into their pocket. So let's see. The P ratio is again a bit higher than it should be. Of course, in this with respect to its competitors, it is lower, but it's not what we want. CFO per pet is also less than one, but interest coverage rate and price to cash flow are okay, not bad. Promoter holding is not decreasing. We should see its operating profit. Okay, it has increased in the last quarter, but as we know, agriculture is a seasonal business. Okay, so in every year we should see the operating profit. So yeah, it is decreasing continuously. So again, the operating cash flow is negative, so we should stay away from such companies. Let's go to this one. This is the last one for the agricultural sector. If we will find good, then only we will invest in it, or we will even try to invest in it. Else not. The ratios are not available for the consolidated statement. It's all right. PE is less. We have a huge debt, but the profit growth is good, but no ROC, and ROC is not considered as good. FCFF is again positive, which is a positive point for the company. I'm just going a bit faster because this is not any promotional video for any company. Okay, I'm showing you that how to find good stocks across the sectors. Okay, so currently we can't find any good stock for this agricultural sector. So let's go in any other sector like wait a minute. Yeah, automobile industry have come. So let's go with the passenger cars. We have many companies here, right? As you all know, according to the PE ratio, we should consider the top four companies. I'm not saying at all that the last two companies are bad, but according to me, currently, according to the market cap and the PE ratio, we should just see this Tata company. We all know, okay, Tata Nexon and Harrier and whatnot. We should see the consolidated statement, a huge market cap. So of course comes a huge debt with it. Profit growth is also negative with higher debt. According to me, it is the red signal. Okay, FCFF is positive because it is a huge business, good ROE, ROC, good promoter holdings also, very less PE ratio. Of course, it should be less because as we can see, huge debt is very high again. Zero point 0.5 is, I don't think it's acceptable, and promoter holding is also continuously decreasing. So red sign for Tata Motors from my side. If you're holding it, do not hold it. According to me, it's again you should first think on your own, but according to me, you should not hold it. Yeah, 3,90,000 crore market cap and 88,000 debt. Debt is again high, but good ROE and ROC, good profit and sales growth too, but FCF is negative. That means Mahindra has still a lot. They have to set up the factories and all that, but the P ratio is the lowest. P ratio is lower because according to the price is more higher. Okay, still also PE is lower, but only 0.46 conversion rate of the operating profit to what the profit they show, and debt to equity is very high. Again, not we should not invest in it according to me, even though it has they have been up to 2 percentages in today only, but still we should not buy it. That means we should not buy it. A bad business is always a bad business, even if some operators just make money over it. It doesn't mean they are good. Profit growth and sales growth are negative, but ROE and ROC are the best. Also, with a bit less debt, as we can see. FCFF is still negative. They are just trying to still cut up everything here. As you can see, the 5 year performances, the price is less and the P ratio is higher. As you can see, the P ratio is not that much higher. The ROE and ROC are good. CF upon PAT is really good. That means their cash in hand is almost more than what they show in their balance sheets. So it's a good interest to coverage ratio is also good. Debt is very low as compared to others in this business. Promoter holding increased a bit in the middle and then again decreased. So it's not a negative sign at all according to me. As the operating profit of the company, it's decreasing year by year because in India the consumption of the consumer vehicles are decreasing from last few years. Still the operating profit year wise is increasing, as we can see, almost increasing or almost the same. So there is not a negative sign like all the other companies. Yeah. Oh, there's a huge drop in the operational cash flow here, as we can see. But the net cash flow is almost way higher than the previous year. So yeah, if you want to buy any company, we can consider it. Or if you want to go for the automobile sector, let's see the last one for the automobile sector. If it is available, then see the consolidated statements only. Yeah, that is minimum. According to the market cap, it is considered nothing. ROE and ROC are good, profit growth and sales growth are very, very less. It is almost negligible, but the CFF is good. There is some always increase all the factories and everything are set up. They don't need to put the money back into the business. It's there in their pocket only. So it's a good thing. P ratio is much lower as compared to the other competitors. And the cover ratio is high. CFO about that is good. Debt to equity is almost zero. And the promoter holding is again increasing, guys. So yeah, we have found a new company. Yeah, operating profit is also increasing in the quarter wise, even though this industry is not overall performing well. The operating profit is also increasing year by year. So yeah, the operating cash flow is again almost the same as the last year, but overall it is negative because they have some investing cash flow. That is, they have must have bought any new company, new subsidiary, or set up new what we can say factory or anything like that. So yeah, overall it's negative, but the operating profit we should see the operating cash flow. So yeah, it's good. So according to me, the best currently is Maruti Suzuki and the Hyundai Motors if you want to go for the automobile sector. Let's see some other sectors also. Yeah, like bank generally we like okay, we see the index also bank nifty. So let's go for some PSU banks. The bank the P ratio doesn't much matter. Let's see one bank and I will tell you that what to do when analyzing all the banks. When analyzing all the banks, we should see the CASA ratio. that it should be higher. CASA ratio means the amount of money that is in the current accounts and the savings account of the bank. Higher it is, the bank will get more amount of money at the lower interest rate, and they will give back at 10 to 12% in the form of loans, right? Yeah, and the cost to income should be as lower as possible, because cost to income means for every 100 rupees the bank gets, how much they need to pay back. They need to pay 65 and they get 100. It's the different thing that they charge 10 to 12% rather than 100 rupees, but for that 65 they have to give, okay, to the customers for the salary and everything like that. ROE and ROCE we should not see for the bank. It's not that ratio. FCF rate is negative. That means still they are setting up. Still the cost of the website and running all the branches is higher. As we know, debt is generally higher for the bank, so we should not consider it. P ratio is lower according to me. Yeah, P ratio is higher according to in all these banks. But if we see in the above the all the banks like the private banks like HDFC and Axis, HDFC's P ratio will be good, I guess. I'm not sure about it. ROA is also increasing year by year, so yeah, that's good. And NPA, as I told you the in the earlier videos also, that NPA means the amount of money that bank is not able to recover from their lenders. I mean, for the people they give loan to, it's almost zero. NIM, net interest margin, is good because this is the margin that they earn from the money they get and from the money they give. Advance is good, that is every year the free cash flow that they give as a loan is increasing, which is a positive point. Yeah, as we can see, the promoter holding, that is the government, just sold many shares, but now they are buying back, so it's a good sign again. For investors are also in a huge amount. So yeah, as we all know, SBI Bank is one of our most trusted bank, trusted government bank, we can say. And so this is how you can analyze the stock of any banking sector. Now let's select any other industry, any a big industry like chemical industry. We will have many companies in it, so let's just get into it. Yeah, defense sector is one of the important sector. Let's let's first see what the P/E ratios of all the companies. And average it is 50/60. We can see that it is the average P/E ratio, and we will see the companies that we know or that is having a good name. Yeah, Parents Defense is one of the big names. Let's analyze it. That is lower, 14 crore. That is considered nothing. ROE and ROC is good. Sales growth and customer growth is very good. FCHF is positive, which is the very nice thing. Yes. From the 5 year chart, we can see P/E ratio is a bit lower than it should be. ROE, ROC again increase. CFO compared is not as they are promising. Okay, and the promoter holder is also continuously decreasing. So according to me, it may give short-term profit, but not a good business idea again. Right? Let's see this. Because of lower P/E ratio and lower debt, so no ROE and ROC at all. You should not consider it. Okay, with a good market cap, invest in aeronautics, very good company. I mean, fundamentally, I'm not telling you to buy or sell. That is very lower. ROE and ROC are also good. FCFF is positive. Let's see the P ratio chart and the price chart. P ratio is almost equal to the price segment. It is not undervalued or not overvalued. Almost it should be valued as it is. CFO compared good interest to coverage ratio is very good. ROE and ROC is also good. Profit growth and sales growth are also good. Promoter holding is not decreasing or increasing much. If FIIs are also 10%. Operating profit in quarterly, again, almost the same as the last quarter. So nothing negative or positive. Year wise, it is increasing as it should. So not a problem in that area. Also, operating cash flow should be positive. It is. Overall cash flow is also positive. According to me, this is a good stock in the defense sector, but it's not a buy recommendation. Let me tell you, this is just for educational purpose. So in this way, we can find the companies in each and every sector like e-commerce. Again, you can see to just first see the PE ratio so that we can find out that the industry PE is almost on an average around 40 50 would be a good one, and with the good market cap we can analyze one of them like yeah India Mart Intermesh. We can go with it. Consolidated statement debt is 0 crore. This is the main positive thing. 12,000 crore company with no debt. Very good. ROE obviously is perfect. Profit growth, health growth, very good. FCF is negative. That means they need some money still to be in the business to set up the business. But it's all right. If it is a good business and getting set up without any debt, it is totally acceptable from my side. You should see your risk appetite and then invest in it. ROE and ROCE are also increase and profit growth also perfect. CFO contract is also very good. Yeah, promoter holding is decreasing a bit of a negative point there, but FIRs are almost 20%, so huge positive there also. And the operating profit is almost the same every quarter. Let's see the year wise, it has been increased hugely. Okay, so let's see if the price have also increased in the 1 year huge amount. Oh, it has decreased 13% decrease in the price from last 1 year, even though the profit grown from 331 to 522. Okay, that's why we tell that only profit does not bring the price up or down. Operating profit continuously increasing cash flow. Overall cash flow is negative because they are investing. I find it's a good business, very good company in the e-commerce sector. Okay, this is how you can see for each and every sector here. Okay, we also have a screener wherein we can type the query. Like for example, I want like companies with profit growth. Okay, net 3 year profit CAGR should be greater than 15%, and also I want a sales growth for 3 years greater than 15%. And for example, I want debt to equity ratio should be less than 0.2% so that low debt companies with a good business come in there. And for example, if I see the FCFF, that means the free cash flow should be increasing by 10% so that the company is a market leader and they don't need much money to stay in the business. Okay, uh, we can type, we can filter out based on many other ratios, but let me see you. You will get all the companies here. And for example, we still want one more filter, like we want a filter for, we have still huge amount of companies. Okay, so for example, we want stable companies so that the market cap should be greater than 500 cm. Let's see how much companies we can reduce to filter out. Yeah, C3 from 337 to 195. So all the small companies have been eliminated. Many of the ratios are there. ROE and ROC. We can also keep such filters. ROC, ROE 3 year average should be greater than 18. These are just some random numbers I'm putting in right now, but you should first see as per the industry, as per the sector, that what are the average ROE and ROC they are earning, and then you can filter it out, not just blindly typing any queries and just seeing it there. Then we can open one by one company and do analysis on the promoter holding and this and that. Okay. So yeah, that's all for today. And comment down below the topic or the share or the mutual fund you want to make me the next videos on. Thank you guys.